So we just had a 25 basis point rate cut from Jerome Powell and the Fed, and the market has been very choppy. I don't think I've ever seen manipulation and chop anything like this. It is becoming extremely hard to predict the day-to-day swings with this market. And in today's video, I'm going to be unpacking everything that we got based off Jerome Powell's FOMC and what I think it means for the crypto market. So if that sounds interesting, please make sure to leave a like on the video, subscribe to the channel as well if you're new, and we'll get straight into it. So we can see crazy price action fluctuation here, huge swings. Bitcoin is kind of in indecision right now. It doesn't really know whether it's going to be making a big move to the upside or a move to the downside. And either way, we're going to have a big move. For the upside move, I would be looking at the next target being the 50-week moving average. That could be the next potential target that we could see on Bitcoin. A move up to this for me is my base case. I said that I sold my altcoin portfolio and de-risked as we lost the 50-week. That was my final line in the sand. I was taking profits, obviously, on the way up with a lot of my alts, taking big profits on coins like Avantis, Zora, Sui when that was up 7x or whatever it was. So I was already taking profits, but then the final line for me was that 50-week moving average, and that was my sell point, and that was my cutoff. So I exited the market for alts at that point. And I've said for me to buy back in, I need to see one of two things. Either a move down to the 200 week, which to me would be confirmation, most likely that we're getting very close to a bottom, or an impulsive break of the 50 week, which to me would signal that this time truly is different. And this is a one of a lifetime cycle. And we are going to be entering, some form of super cycle. And I use those words very carefully because people have been calling for a super cycle for years in crypto, and it's never happened. We've always had a normal cycle that ends in Q4 in a post-halving year. So whilst it isn't my base case that we have some form of extended cycle, some form of right translated cycle, I still, value it as a potential scenario. And if we do get a break of the 50, for me, that would signify a potential extended cycle. And, if we break 116K, which was the point we had a really brutal rejection, then I would expect Bitcoin to go way higher than just its 126K mark. Now, I've been having conversations with people within my Discord group about, whether Bitcoin would just kind of go back up to 126 if it did break above the 50-week. And I am of the belief that if we were to break above the 50-week with volume and on an impulsive move, we wouldn't just stop at 126K. I believe we would go a hell of a lot higher than that, and probably we would be seeing 150 to 200. But I maintain my base case belief that we will not see 150 to 200K Bitcoin until we come down to the 200-week moving average. That is my base case. I don't think we're seeing new all-time highs until we come down to that 200-week. I could be wrong, and I'm happy to flip. People call you a flip-flop for changing your opinion in crypto, but quite often the market changes. So if you don't adapt, you're going to perish. So you need to change your opinions constantly. The market is fluid. And if you're just stuck in your ways, obviously you're going to be stuck in the past. You're going to be buying Bitcoin Cash or Litecoin. I'm not saying those are terrible cryptos, but they're not really doing anything nowadays, right? So you need to adapt. Otherwise, you are just going to be stuck in the past. And for me, if we got to break above that 50-week with volume, with an impulsive move, that would be enough for me to really think this time is probably different here. So short term has been extremely choppy, extremely difficult to trade. And that is because of the importance of the FOMC event we just had. The Fed came out and essentially said that they are going to start technical buying of treasury bills to manage market liquidity. This is from Reuters. This is what Jerome Powell essentially said. And this is insane, right? This is basically QE. They're not describing it as QE, but the initial round will total around $40 billion in treasury bills per month. So they're not going to tell you this is QE, but it is essentially easing, and they are buying up treasury bills, which is basically what QE is. It's stimulative. They're throwing money into the system. They're injecting liquidity, and this is going to ease the liquidity system, right? Which is having some tightened effects as of late. So if we can get QE, and it's only starting with 40 billion, but if they can ramp that up and we get some really good liquidity injection into the system, then eventually it will find its way over to risk on assets such as Bitcoin. And if we look at the Russell 2000 right now, I find it very, very interesting because the Russell 2000 is making a bit of a breakout move to the upside. It's surpassing its all-time highs, which I find very, very interesting. The Russell 2000 is basically your risk on asset class. This is your small cap stock index, and that is breaking out right now, obviously partly due to the Fed's rate cuts, but also due to the fact that we're going to be getting easing of liquidity, and that is only going to benefit these smaller companies that aren't as strong with their finances as the Mag 7, right? These companies are much more reliant on liquidity and they are much more rate sensitive. And I would argue that the crypto market is very rate sensitive. Bitcoin is a very liquid asset. You can sell it very quickly. You can buy it very quickly. It's the first to sell off during bad news, and it's the first to pump during good news. So if we do get further liquidity injections into this market, I think it's going to be a good thing. The $1 million question is, how long is it going to take before it reaches BTC? And I would argue it's going to take some time. So I still favor that move down to around the 200. I'm not going to say exactly on the 200, but there or thereabouts. It could just be a move to previous all-time highs, right? 69, 64K, something like that. But my point is, since we lost the 50 week, I still favor some form of a further downward move on Bitcoin in the coming months. And like I said, my validation point for that would be a break above the 50. Can't just be a little tiny break above, because that has happened in the past. They've been fake outs. It has to be a clear, decisive push up with liquidity, and it can't be debatable. Now, the big event for me is the Bank of Japan decision in December. Now, that is arguably priced in. People are saying that they're going to increase rates, 96% chance according to Polymarket. But the reality is this could have some form of a short-term bearish effect on the markets. This is December 19th. So get that date in your diaries, because that could certainly be an event that brings some volatility to the market. Now, that pretty much wraps up my market overview. One thing to note as well, guys, is the rate cut probability for January. It looks like the Fed are not going to be cutting in January. Obviously, that is going to be interesting to see whether we get a cut, whether those probabilities change. But right now, it seems like there's an 80% chance of no cut. March is a bit more up for debate. But right now, it's looking like we're not going to be getting a rate cut for some time. It could even be second half of 2026, the way it's looking. So it all depends on the labor market data and the inflation data, and we're going to continue to monitor this on this channel. Thank you guys for tuning in. Check out the VIP group. Use the code Christmas at checkout for 30% off. This is the most active group in the crypto market, and everyone is here helping each other out. We're having voice chats. You get my crypto buy and sell signals, and you get my stock market signals alongside additional VIP content. So check it out, guys. There's a great discount there for you.